Most people work 40 hours, they work 40 years, never own an investment property. Some don't even have their own primary homes. But let's talk about this tonight because they can't, because nobody taught them how. Let us talk about it today. You want to learn about real estate investing. Understand one thing, that one of the biggest, we've understood something and we've been showing this for the past few days. Where does the wealthy, where does the multimillionaire, where did they put their money? They put their money in, they put their money in real estate. They put it in ETFs, right? That's one of the things that we have confirmed the past few days, and that's what we were talking about real estate today. Why do people don't buy real estate? But guess what the wealthy does? USBC, welcome in. Gary, welcome in. Kim Vaughn, the cute Sammy. Welcome all of you in and welcome to the $1 Million League. This is the community of millionaires where we are raising millionaires, right? If your goal is to become a millionaire, make sure you click on the follow button, tap out the live, share out the live. People do work for 40 years. 40 hours, 40 years, but they never get to the $1 million status even at 65. But guess what? In this community of millionaires, we're changing the status quo where we're saying people build wealth in 10 years or less, get to that $1 million status. And today, we want to understand, why do the middle class, why do most people, why don't they invest in real estate? Understanding that is where the multimillionaires and the billionaires, where they put their money. As a matter of fact, you can actually get your gadget, take another gadget and check this right now. And you would see, where does the multimillionaire, just go on Google, where does the multimillionaire put their money? And you would see real estate is going to be one on that list. Smart investing is going to be the second one. So why do the middle class, why do they not put their money? But guess what? The wealthy, they put their money there. That's what we want to talk about today. Because people work for 40 years. They work 40 hours, 40 years, and never own an investment property. Why? It's because nobody taught them. Some people are too scared to get started. Lack of strategy, because confusion, they don't even know how. The cute Sammy, thank you for tapping out the live. And for those on YouTube, this is the $1 Million League. And if you're just meeting me, I'm Dr. Lina. I'm a doctor of business and technology. I own and manage a double-digit real estate portfolio. I've been investing in the real estate specifically for over a decade, and in the investing generally for close to 2 decades. So it's so good to meet you. And I'm a wealth coach, and I teach you how to build wealth, turning down your income into real wealth, because we established it in the past few days that if all that you do is take your money and you put it in the bank, guess what? You get 0.01%. But guess what? Inflation is at 3.8%. It means that you are gaining your money, you are only getting 0.01%, but then you are losing 3.8% to inflation. So let's talk about it today. How do you edge against that? Real estate is one of the strategy. And today we had both the TikTok community and the YouTube community. So make sure that on the YouTube side, make sure you click on the follow button, because you have those long form videos, free resources for you to help you build wealth. And here on the TikTok community, all you have to do, tap out the live, click on the follow button, and join the $1 Million League, the League of Millionaires. And real estate is one of the strategies that we use to build millions here within this community. So welcome each and every one of you, and happy Wednesday to everyone right here. And we'll get it started. The biggest reason why people never invest in real estate is, number 1, confusion, 2, fear, and 3, lack of strategy. And then the next question would be, so why should I even invest in real estate? Why is real estate a good deal? Or why? Maybe you've been wondering, why is there an hype about this real estate? What's the big deal about real estate? Yes, there's a major hype, because wherever you see the multimillionaires, the billionaires, wherever you see them put their money, then you should run towards the place. If they put their money on something, know that there's something that they're getting in return. It's building them wealth. So if the multimillionaires are doing that, and I will take my gadget right now and show you, where does the multimillionaire, and you can do the same thing. I always say on the social media space, always trust but verify. But let's do something. And I want you to do the same thing. Go on Google or ChatGPT or anything, any of your search engines, and check, where does the multimillionaire, where do they put their money? Okay? and tell me what your result is. Where does the multimillionaire, where do they put their money? Thank you all for tapping out the like, sharing out the like. Click on the follow button and join the $1 Million League. This community is called the $1 Million League, a league of millionaires. People aspiring, either you are in that $1 million status or you are aspiring to be that millionaire. We're doing it in 10 years or less. We're not saying you're doing it in 40 years. 40 years, people don't even get there. Working from age 20 to 65, they don't get there. But we are saying we're doing it in 10 years, and definitely real estate is part of the strategy. So you know already. And Rafi just joined the $1 Million family. Congratulations to you taking a decision on your finances. And that's what we're going to be talking about here. Click on that follow button, join the $1 Million League. We'll get it all started. Where does the multimillionaire put their money? And for my YouTube community, click on that subscribe button right there. Don't wait and just join the $1 Million League right here. Except you don't want to. I mean, I know everybody wants to get to that $1 Million status, even if you don't want to. Nicole, welcome in. Nidia, welcome in on the YouTube side. Click on that subscribe button. And we want to understand, most people don't invest in real estate. Some people even just say that I will just rent. But how come the wealthy, how come they invest in real estate, right? So let's check something. And I said that earlier. Where does the wealthy, where did they put their money? Where does the wealthy, where did they put their money? The multi-millionaire, specifically please make me number one. I'm not sure what you mean, right? Click on the subscribe button right there. Yeah. So to join the $1 Million League, just click on the follow button, click on the subscribe button on the YouTube channel, and you would see yourself be a part of that. So where does the multimillionaire, where do they put their money? That's it. You can also do that search. Do that search alongside myself right now. It says multimillionaire puts their money primarily in equities. In the past few days, we've talked about ETF, exchange traded funds, right? Called a bouquet of stocks instead of individual stocks. We talked about that for the past few days. We talked about the rule of 72, how long it takes your money to double. If you put it in an S&P 500 or in any form of investment, you put it in stock, how long does it take to double? If you put it in the bank, 0.01%, it takes 7,200 years for your money to double. If you put it in, if you're getting 1% interest, it takes you about 72 years for your money to double. So you might be wondering, why am I not building wealth? That's one strategy. One of the things that you're doing that is not making you build wealth. And guess what? The middle class, this is where they put their money, the bank. Guess what? That's why they're not building money. That's why they're not building wealth. The second place that the middle class, the second mistake that the middle class does is the level of taxes that we pay. Real estate helps you to reduce taxes. Businesses helps you to reduce taxes. And we're going to talk about that today. So click on that follow button, and Jay just joined the $1 Million League. Congratulations on taking that action and committing to become part of the millionaire community. And let's tap out the live. We'll try to get to 10,000 taps within the first 10 minutes. And that's for the TikTok community. Tap out the live, get your daily at me. It costs you 1 penny, but you get 30 points back. And be a fan of this community. Now that you're part of the community of millionaires, this is the League of Millionaires. Right here, people say that we want to get to that $1 million status in 10 years or less. People do not get that in 45 years. Working from age 20 to 65, people retire and they still do not get to $1 million status. So we're changing the status quo, and real estate is part of the strategy. And as a matter of fact, you will agree with me that if you want to achieve a certain result, right? You want to get to a certain destination, you look up to the people that have already achieved that result, right? Right? So if you're saying that we are millionaires, right? $1 Million League, it means that we want to understand, where does the multi-millionaires, remember, I'm not saying millionaires because there are so many millionaires in their 401k. 401k, you become a millionaire. You buy a house, over time, in 30 years, you pay it off, you become a millionaire. Now we're talking about, let's take it one step ahead. My listener, thank you for tapping out the live, and everyone here tapping. So come with me, right? Now, that's why we go to the next level, because there's a proverb that says, if you aim for the moon, right? If you can't get to the moon, you'll get to the sky or whatever, or vice versa, right? So we aim for something higher. We're aiming for goal is $1 million status in 10 years or less. But then for you to, we will aim for multi-million, right? Where does the multi-million? Hey, Brian, welcome in. Click on that subscribe button. We're talking about why most people do not invest in real estate. But guess what? The multi-millionaires and the billionaires, they have a large part of their asset and investment of their money in real estate. So it means that there's something about real estate that the middle class misses. Okay. So and we're on Google right now. Why? Where does the multi-millionaire put their money? Click on that follow button to become a part of the $1 Million League. All right. Multi-millionaires put their money primarily in equities. Equities, right? Jerome, welcome to the $1 Million family. Congratulations to you. Clicking that follow button. Congratulations to you. Multi-millionaires put their money primarily in equities. So we talked about ETF. You'll come back again if you missed that. If you, now that you're part of this community, you will learn everything that we would always talk about ETFs again, maybe sometime next week. So if you missed that, they put their money in, second thing they put their money, real estate. Real estate. Remember, we're talking about real estate. Real estate did not come out of any other place. And then they put their money in private businesses, right? Private businesses. As a matter of fact, there's the statistics of the multi-millionaires and the richest people in the world. Guess what? We have athletes, we have, business owners, we have, but guess what? What was not on that list was employees. So if all that you do is you're an employee or whatever, guess what? You're not building wealth, right? But guess what? You can actually build wealth if you follow this strategy. Moving to the investors category, because definitely investors was in that list of people that are the richest people in the world. So if you want to be, then you need to switch. Not that you switch totally, not saying quitting your job, but you need to figure out how to start investing and become an investor, which real estate helps you to do. Millionaires put money primarily in equities, real estate, private businesses, because having idle cash loses value to inflation. So if you put your money in the bank, you're losing 3.8%. That's what you're losing. And then they focus on long-term wealth compounding and asset diversification rather than packing excess funds in traditional checking and savings, right? Traditional checking and savings account. So you want to build wealth. You cannot leave your money in your checking account and your savings account, because you will not build wealth that way. Let's tap out the live, okay? Let's tap out the live, share out the live, tap out the live. Sharing is you press the forward on my screen and share out to all your friends, right? Your contacts, share with them. Then tapping out the live doesn't cost you anything, just your fingers. Tap out the live and click on the follow button and join the $1 Million League. And if you're just meeting me, I'm Dr. Lina. I'm a doctor of business and technology. I help professionals turn their income into real wealth. And you might be wondering, Dr. Lina, how come you qualify to talk about real estate? That's because I'm a serial investor. I've been investing for close to 2 decades, specifically in real estate over a decade. And I'm telling myself, why did I not even start sooner, right? That's one thing. One of my biggest regrets is that not starting real estate sooner. And we will talk about it. So wealthy investors allocate their fortune across, I'm reading it out, allocate their fortune across these core vehicles, equities and investment funds. The bulk of their wealth is usually held in taxable brokerage accounts, index fund, dividend-paying stocks, and institutional wealth management funds. So that's ETF. We talked about ETF for so long, right? Well, today it's about the next one, real estate. Beyond primary homes, they invest in commercial properties. So they have their own primary home. Now you know that I remixed that's amazing. Oh, that's great. That's great. It's so good to have you. Which of them, developer Wale? Which of them? Right, I have so many remixes right now. So many on YouTube. I have, on Instagram I have which one? There's one that is 1.7 million. There's another one that's 400,000. Another one is 300,000. So there's so many of them. All right, I'll take it. That's great. That's great. So beyond primary home. So it means that if you're in the habit or you're thinking, when people tell you rent versus buy, it might make sense within the first 5 years. Let's tap out the live and share out the live. Let's tap out the live, okay? Tapping out the live, you see the algorithm. I see that now. Tapping the live, you see the algorithm. You see the algorithm will change, right? you would see that more people will be pushed here. Let's tap out the live. Can we just do that? Tap out the live, share out the live. Check if you have not clicked on the follow button and join the $1 Million Day. We're talking about real estate today. So beyond primary homes, they invest in commercial properties, rental real estate, and real estate investment trust. So even if you have not if you have not started, right, you can do something like REIT, real estate investment trust. So that is more like an ETF, but in real estate. So they put money in that as well to generate passive income and hedge against market downturns. So that is what the multimillionaires, that's where they put their money. The third thing that they have is private equity and angel investing. And the fourth that they have, hey, Bonnie, welcome in. Alternative assets. That's the other one that they have. Alternative assets. They diversify using physical assets and commodities, including fine art, vintage collection, and precious metals. So like gold, like silver, and all of those kind of things. That's where the wealthy, the multimillionaires and the billionaires, where they put their money. Queen, welcome in, right? That's where they put their money. But today we're focusing on one of the most important ones, which is, we've talked about ETF, right? In the past, how many days? Today, we're talking about real estate. And what do we want to talk about real estate? Or why am I bringing real estate today? Because I want to let you know why do most people never invest in real estate? Put in the comment, why are you not investing in real estate? Why? Put in the comment. I want to know. Thank you for tapping out the live in. This is the $1 Million League. Welcome. This is the community of millionaires, and real estate is one of the tools, as well as ETF is one of the tools or pillars that we're using to build wealth within this community, right? That's what we're doing right here. So if you have been wanting to become a millionaire, or you've been wanting to have your income, grow your income, maybe you're making some decent income and you see that you're struggling, right? You're still having financial fright. Then you are in the right place. Make sure you click on that follow button and let's tap out the live. The question is, what is one thing that is keeping you from investing in real estate? Why are you not investing in real estate? And for my YouTube community, why are you not investing in real estate? Let me know where you're connecting from. Make sure you click on that subscribe button, because we have those long form videos, and join the $1 Million League right here. Let's keep tapping out the live. Why are you not investing in real estate? Why? Okay, why? My Alistic, Queen L, Developer Wallet, Jerome, Ebony, Obapa, Sante, Jean House, Opal, my Chinese friend, Fabu, Avon. Yeah, why you don't have money, don't understand that, okay? I don't have money, okay? Very, 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 very common. No money, all right? And you do not understand. So lack of knowledge, lack of money. Those are two things. Lack of knowledge, lack of money. Any other way? Doctor, I couldn't find the link to register for upcoming workshop. You will find it in my bio. If you click on my bio, okay, let me quickly show you. Right? Dr. Lina. Yeah. All right. I'm just waiting on everyone. Why are you not investing in real estate? So this is my bio. Click on the link, and for anybody that wants to register for the Wealth Building Academy, that is free, but registration is required June 6th. Click on it. Next week, Saturday. Click on right there, Queen. And for everyone, click on it. Open anyway. All right. So this is it. The Wealth Building Academy. Just click on it. It's a free training where we're teaching each other. As a matter of fact, we have 4 to 5 doctors, PhDs, by the way, that are coming to teach, like 2 chief information security officers, chief people officer. We're still waiting on confirmation. 2 directors and 1 owner of our own private clinic in New York, and of course my uncle self will be there as well. So Queen, I hope that resolve your issue. Okay. Let me know. And Opal, if you should have gotten an email, check your spam. Once you register, you will get an email with the Zoom link. You will get an email. Otherwise, do the registration one more time. So let's go. So Opal said it's because of lack of knowledge, and he lacks money. Any other person cares to share? Queen, Any other person wants to share, why are you not investing in real estate? Why? And make sure you are tapping. Thank you for all that is tapping out the live. Also share the live. Share the live. Invite your friends over. Invite them over, right? Get your daily at me as well. So why are you not investing in real estate? Understanding, we just read, where does the multi-millionaires, where do they put their money? We just read it. Real estate is there, right there. As a matter of fact, it's number 1 and 2, right? It's right there. Why are you not investing in real estate? Okay? Because most people work 40 years. They work 40 hours, no funds. Okay, lack of funds. Okay, no funds. Most people work 40 hours for 40 years, even at times 45 years, and never own an investment. Never own an investment property, never own an asset because they can't. Not because they cannot. Not because they cannot afford it, right? Even Queen and Opal that said they cannot afford it, I tell you, by the time we're done, you would see that you can actually afford it beyond you can imagine, beyond your imagination, right? But because nobody taught them, that's why we want to talk about this today, okay? So let's think about it. Number 1 thing, yes, somebody mentioned, Opal mentioned, lack of funds. Opal and Queen said lack of funds. Opal said lack of education. Another thing is the fear, right? The fear of starting. So a lot of time, it's not about the money. It's not about it's like, oh my goodness, how do I even get started? I don't even know. I mean, we even talk about simple ETF, right? For you to even open your account and start funding. It's a lot of people are just afraid. They're just comfortable with open my bank account and the money goes there. The fear of starting is another one. Another thing is that thinking you need huge money, right? Like Queen just said. And I'll give you an instance. One of my clients, she's in Kelly, Texas, and we had a one-on-one. As a matter of fact, you can book a one-on-one consultation, right? We had a one-on-one consultation. And as a part of our goal is our own dream is not just dream, prayer and dream is I want to have my own home. And then we started the conversation. And I tell you, she's not the only one in this thing that I'm talking about. We started the conversation and we started because as part of your one-on-one, you have your own personalized wealth blueprint. So we looked at the income. I looked at our own expense, not the entire family, just that income. By the time we were done with our own income and expense, she said, okay, my goal is we want to buy our own home because we have this number of kids. We want them to have their own yard and all of that. And I was like, okay, so when do you plan to buy? She said, well, we can only buy it in 5 years' time. I'm like, 5 years, why? She said, because of the funds. So I said, okay, let's look at the numbers. And I was so shocked that when we did the numbers, and I was like, okay, so do you have any other thing somewhere? She doesn't have any debt, nothing. By the time we were done, I'm like, okay, how much is the house that you are looking for? I thought she was going to say maybe 600,000, 500,000. She said, I want this neighborhood. A 4-bedroom is okay. Even a 3-bedroom is okay. We looked at we said, okay, is there a particular neighborhood or a zip code? We put the zip code in. The zip code comes. Guess what? The properties were like 290, 320s and all of that. With her income alone, not including her husband, they are also into the military, right? So we're not even considering VA or anything loan or whatever, or down payment or any support. She can buy she will be buying a property. She's buying a property by December of this year. So this was last month, buying in 6 months. She said it was going to take her 5 years. Trust me, a lot of people have the same belief. It takes a lot to invest, thinking you need huge money. But guess what? You don't. You'll be so shocked. So that's the other thing. The other thing is that bad information online. Guess what? I always say, trust but verify. That's what I always say. Whatever we say here, that's what you see. Whenever I tell you, where does the wealthy, where did they put their money? The multi-millionaire. I'm able to show it to you. It's on Google. It's not me. It's on ChatGPT. You can find it there. Do it side by side. And as a matter of fact, this is even beyond me. Whatever I do here, Check it, fact check it. But also, whenever you go and listen to anyone, make sure you are doing your research. Do not follow people blindly. Do your own little, even if it's 2 minutes research, do it, okay? Because you are working too hard for your money. I've seen it several times where people, they'll say they want to invest on your behalf. On no condition, and I say it again, on no condition should you give anybody your money to invest on your behalf. If they cannot teach you what they are doing, don't give your money to anyone except the investment houses, right? Like a Vanguard, World Simple, right? Right? Bamboo. Those are the investment brokerage firm, and they're not investing for you, except that it's a managed fund, right? But giving an individual online your money, right? Especially when they say that what's this common one? On on WhatsApp, guys. Kindly like the live. Oh, thank you. Right. Guess what? They say on Telegram or on WhatsApp. Guess what? People are being scammed on a daily basis. I'm telling you because I have seen it. I have had clients that was swapped close over $50,000. So because they're saying they're investing on our behalf. So that's that aside. Bad information online. They tell you, oh, you know what? You need this amount to start investing in real estate. No, you cannot buy real estate until this. That's another thing. Another thing is that overthinking, analysis paralysis. Oh, you know what? I have to do this. I have to dot the I's and cross the T's. Then you never get started. Let's tap out the live and share out the live. Let's share out the live. Tap out the live, click on the follow button and join the $1 Million League. And this is why most people don't buy real estate. But guess what? The wealthy, they have it in their portfolio. An average multimillionaire would have real estate, not one, not two, in their portfolio. You can actually Google right now, you would see it right there that they have real estate in it. The other thing is that not knowing where to buy. This is the biggest issue. A lot of times people will be like, okay, you know what? I want to buy real estate. Some people dabble and jump into it, and then they realize that, oh, you know what? I went underwaters. For instance, about 3 years ago, who remembers the bidding war? The bidding war where people were competing, right? Property is 300,000. The owner of the property, the market value of the property is 300,000. But guess what? People are saying, you know what? I'll bid to 320. The other one will say, no, it's 340. Then the IP to 400. Welcome, Tammy Flores, Black Boss. Welcome in and click on the subscribe, follow, and the subscribe button if you haven't done so, and join the $1 Million League. Come, how are you? Welcome in, right? Welcome to the League of Millionaires, and we're talking about real estate today. Why do people not invest in real estate? Understanding that the multimillionaires and the billionaires put their money in this investment, and that's how part of the reason why they are building wealth. But guess what? The middle class are not investing, and that's what we're trying to address first before we start talking about how to go about it. So, not knowing where to buy or buying it the wrong way, right? You want to know the exact deal. What is the market value? You want to know, you don't even know how to go about it. So that's the other thing. Not understanding financing, right? That is very linked to when people would say, oh, you know what? I require a lot of investment, a lot of money to start up. Guess what? If that property is 300,000, they don't need you to bring $300,000. As a matter of fact, one of the major benefits or one of the biggest thing that real estate has is leverage and use of other people's money, right? Unlike ETF or stock market, where the leverage is pretty minimal, when it comes to real estate, leverage is real estate and some form of businesses, right? Like XBA loan and all of that. Your chances of you using leverage. So leverage simply means that you want a property of $1 million. All you have to bring in is $200,000. You want a property of $250,000. All you have to bring in is $8,750. Not $8,000. Less than $10,000 is all that you need to bring. That is what real estate does for you. But guess what? Yes, you might be saying that, yeah, it's a loan. That is a good debt. That is the only time I encourage you to take debt, because that's good debt. Any debt that is puts money in your pocket, right? That is good debt. So think about it. You have 200,000. The property is 1 million. Your return on investment is on 1 million, not on 200,000. That's the difference between ETF and real estate, or, because I talk about those two pillars. ETF, right? If you want to buy ETF of 200,000, better have that buy ETF of 1 million, you better have that $1 million in your bank account. But when it comes to real estate, you want to buy real estate of $1 million, you only have to bring about 200,000 or even less, depending on the kind of loan that you're bringing. Or if it's probably of 300,000, you only have to bring about 30,000, a little bit above that, to bring it as down payment, or even less. Because guess what? There are investment that you can actually do, real estate, that all that you have to bring is even less than 5%. There is no other asset class that's going to help you do that. And the beauty of it is that the returns that you get is your return on investment. Let's use the logic of the 1 million just for numbers sake. If it's ETF, 200,000, return on your investment is on 200,000. You take that 200,000, you put it in real estate. Your 200,000 becomes 1 million, right? Because you are leveraging. The bank is giving you 800,000. You buy property of 1 million. That 1 million, guess what? That 1 million, that your return on investment is on 1 million, not on 200,000. And then you're like, oh, but Dr. Lina, the 800,000 is also a loan, is a whatever. But guess what? Who pays that 800,000? Not you. Who? The tenant. Somebody else that is renting it from you. That's the person that pays the 800,000 back. But guess what? Who owns the asset of 1 million? You. Who gets the return on investment of 1 million? You. Who then on top of that, the asset appreciates. The appreciation, real estate doubles its value in 10 years. So when he's doubling his value, he's not going to double his value on 200,000. He's doubling it on 1 million. That is the beauty of real estate, right? Who becomes $2 million in 10 years? That is you. But guess what? Who would have been paying down the 800,000 for 10 years? Somebody else. That's the beauty of real estate. Okay. So, and I'm using 1 million just for numbers in my head. When the number is a full, I can easily do my maths that way. Or not understanding financing. There's so many financing options that is available. So many. And then we're going to be talking about some of them today. The other thing is the biggest one, the fear of tenants. Yay, is the beginning of wisdom. The fear of tenants is the beginning of wisdom. That is when you put yourself at the mercy of a tenant. And I tell you, because yes, a lot of people, a lot of real estate investors do not know this thing that I do, right? It's not everybody that knows this, and it's not a lot of people that has this experience. Why? How do I know? Whenever I wanted to start real estate about 14 years ago, or even a little bit about more that, whenever I wanted to start, one of the things that I went for a training, right? I went for a training, and the training that I went for, why did I go for the training? I lost money in the stock market. I lost about $99,000. Now, I was like, okay, you know what? I'm not giving up on this investing thing, because I understand that the bank is not going to make me wealthy. I know I'm losing money putting my money in the bank, right? So I was like, okay, you know what? Then I was also doing 529 for the kids. And we'll talk about 529 real estate, IUL, and all of those things at some point, right? So I said, okay, you know what? This 529 thing, it's not working for me. I mean, I don't know if it's working for anybody, but for those that are working for, that's amazing. But 529 is the educational fund for kids. So this is how I got into real estate. And then I was like, okay, you know what? We will pause it at where we are right now. And we will use real estate to start funding the kids' education. So because I'd lost almost 100,000 in the stock market, I decided to say, you know what? I need to get education, because it means that I lack education. That's why I lost money in the stock market. So I said, okay, you know what? I will take my education. That was about 14 years ago. I paid $1,000. That's the training. The training was just how to identify a deal, how to buy real estate. That was all. Guess what? As good as the training was, guess what? They did not teach us property management, right? Because guess what? They also undo a property management arm. Now, for me, what I've basically done is I manage and I own and manage double-digit real estate portfolio. So I am one of those people that understands how not to fear your tenant. As a matter of fact, my tenant would fear. I mean, we are either friends or you fear me, but I'm not your landlord, right? Because there is the property management, but not the outside property management. But we'll talk about it. Those are some of the strategies, right? Because you want to position yourself to. I'll give you something on a Sunday. This past Sunday, a tenant reached out to me and said, "Oh, send a message. You know, the all of the outlets in the kitchen area and everything stopped working." Of course. Okay, stop working. We've tried to do the switch over or whatever. First of all, you don't even have a phone number. Send an email. At times, it is just in simple things like that. Send an email, right? When they send an email, by the time I was going back again, I said, okay, can you go and turn on the GFCI or GCFI? Is it GFCI, whatever? Make sure it's not blinking, whatever. She said, oh, the issue is already resolved. But guess what? Some other landlords would have rushed, right? You need to know when to rush. You need to know when to okay, my bulb is off. How is that my problem? What is your lease saying? Do you have a contract in place? Are you available to them? Those are things that mistake that people make. And, and then a tenant did not pay you. And then you said it was okay. You're just waiting, right? What's happening? When tenant doesn't pay you, you should have a structure. By this day, you're sending this reminder. By this day, the tenant has not paid you. Guess, notice to pay or vacate. Be out. That's it, right? And move on, right? Call it a quit. But a lot of people wait. And they were like, 6 months, somebody has not paid you. Are you crazy? Are you the owner of the person are you the owner of my house? Right? That you would live in the house without, it's not possible. So those are the things, right? Fear of tenants. So those are things that people fear. But then guess what? If you put the right structure and the system in place, just the same way I talk about your money, put structure and system in place. Guess what? Tenant is going to be easy peasy. Some people would say, oh, tenant damages their home. Why would you damage the home? If you damage the home, you pay for it. And it's those are things, right? And then you need to know when to call it quit, to say that, okay, you know what? I'm counting my losses. Some people want to just stay there. Well, fear of tenants. You need to understand how to manage tenants. The other thing is that fear of losing money. Yes, this one. Fear of losing money. Whenever you are investing, yes, there is going to be the risk. But guess what? If you leave the money in the bank, there is the standard risk that is there. It's not even a risk. Default risk that is there. Inflation is taking 3.8% from you. So either way, it's either you lose it to inflation, not even doing anything, right? Lose it to inflation, lose half of your money in 15 years, right? Or you put it in either in investing, and then you manage the risk by yourself. Manage the reason. Part of the reason why I love real estate is because I don't have control over stock market. I don't have control over if somebody decides to wake up, sleep on the wrong side of the bed, and wake up fighting with the wife, right? And guess what? Decides to tank the market and say that, oh, you know what? Because these people, AD, welcome to the $1 Million League. Congratulations, clicking on that follow button. Welcome to the $1 Million League, right? And this is the community of millionaires. Click the follow button and that's it. You are part of that community saying that we want to become millionaires. I want to become a millionaire in 10 years, in 10 years or less versus the traditional one, which is 45 years. So that is, yeah. So that's all up to you. Well, click on the follow button, and that's what we talk about here. Real estate is part of the tool. And we're saying why, oh yes, amazing. See, amazing. Congratulations being there. But guess what? The other part of it is for you to scale, right? Scaling from absolutely, you're a millionaire. You have claimed it. And you are in the right community because this is a league of millionaires. And then this is not by word of mouth or prophecy, right? We have vision boards. We have plans. Hey, thank you so much for the roses. We have vision board. We have plans. We have all of the steps to get there. The only thing that it's going to take us is you need to, it's in your hands to execute. It's in your hand to actually take actions. It's in your hand, take the principles, the processes that we talk about here, the steps that execute, 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 be coachable and execute and follow through on the plan, right? And that's it. That's it. We talk about 4 pillars of wealth creation here. So this here is a full wealth building curriculum. As a matter of fact, we have the academy, Wealth Building Academy, June the 6th. You'll find the link in my bio. Or otherwise, stick around and I will show you at the end of the class. Awesome. So, fear of losing money. Investing, not putting it in the bank or in your bank. We already showed it, right? Inflation at 3.8%. Now it's 3.8%. As of a month ago, it's 3.3%. It means you are losing your money at 3.8%. For every dollar, right? For every $100, you lose $3.08. That's what it means. $3.08. That's what you lose every single year, right? That's inflation for you. Now, but then how do you hedge against inflation? By investing. But then there's also the risk. But then you keep investing, but invest what? Smartly. Protection comes first. That's what we talk about here. Protect it and then grow it. Protect it and grow it. Let's tap out the live. Thank you all for tapping out the live. Thank you for tapping out. Click on that follow button. If you've been sitting here for more than 5 minutes, click on that follow button and join the $1 Million League. It means that you have found value right here. And as a matter of fact, if you have clicked the follow button, join the fan as well and become, it costs you 1 penny. Get your daily at me. Daily at me. It costs you 1 penny, but you get 30 points. And for my YouTube community, welcome as well. And make sure you click on the subscribe button if you have not done so and join the $1 Million League, a league of millionaires, people that want to get to that $1 million status in 10 years or less. And I'm Dr. Lina, Doctor of Business and Technology. If you're just meeting me, and I'm a serial investor with double-digit real estate portfolio. Reason why I can talk to you about is manage and own, right? And I teach you this strategy so that you can turn that your 9 to 5 into real income. Let me show you one of the strategy we talked about. Your income, take some of it, put it towards lifestyle. Take some of that income, use it towards assets like real estate, like ETF, like businesses. That asset will now give you something called cash flow. This is cash flow. Cash flow fund your lifestyle. And that is how you build wealth, right? Using that your income. That's a strategy right there. In between here is delayed gratification. Unfortunately, the middle class, they want instant gratification. This is not about get rich quick scheme. This is not about hypes. This is about following processes and building generational wealth. Not just for you, it's something that you can also teach your children and your children's children. So tap out the live, share out the live, press my forehead and share out the live. Get your daily at me as well. So we're talking about real estate, understanding that the multi-millionaires, real estate is one of the tools that they use in building wealth. Now, fear of losing money. Yes, whenever it comes to investing, there's the fear of losing money. The other thing is waiting too long. There's so many people here. I was also a part of it, right? I waited. I really wish that close to 2 decades I've been investing. One of our properties that we bought over 10 years ago, 7 years ago, right, already doubled this value. One of the beautiful things about real estate or investing is time in the market. The time that longer you are in the market, right? And I'll show what the multimillionaires, they did say it here. The multimillionaires, they say they focus on long-term wealth compounding and asset diversification. Real estate helps you to diversify because you're not just only putting your money in the stock market, but then at the same time, it compounds. Even if you take a 30 years mortgage, it means that somebody is going to pay your mortgage for 30 good years. And guess what? After 30 years, guess who becomes the owner of it is you. And within real estate double its value every 10 years. So it means that property is going to double itself more than 3 times, right? And guess what? It's going to be paid off by somebody else. That is why real estate is one of the, I call it the wealth accelerator. I call it wealth accelerator because it's absolutely mind-blowing. It's absolutely mind-blowing. So waiting too long, and this is, basically the exact solution, how to go about it. You want to learn about it. That's why we are welcoming, and let's keep tapping out the live. Invite your friend. Make sure you click on the follow button if you haven't, and join the $1 million league, right? $1 million league. So what is that common thing about middle class? What's that common thing about middle class? You get high income, or your income increases, but guess what? You have that decent income, but guess what? You don't have an asset. That resonates, right? I was exactly that way. Or rose up until, before I became a vice president of technology, no single asset. Up until so many years, was working and of course paying bills, doing lifestyle and all of that, making some decent income, but guess what? Did not gain financial freedom. One of the, I talk about money. Yes, you see Money Talk with Dr. Lina. But here, it's about financial freedom. Money is just a tool, right? Because if you have to trade your time for money, you're trading your time for money every single time, right? It means that you have to continue to work to fund that lifestyle. You trade your time for money to pay bills. Guess what? You means that for you to fund that lifestyle or pay that bills, you have to continue to work. That means paycheck to paycheck. It means the hamster wheel. It means what? Rat race. Welcome, Barry, and congratulations joining the $1 Million League. Congratulations to Barry joining the $1 Million League, clicking that follow button and clicking that subscribe button. Awesome. So, high income, no asset. So that's number one. You need to have an asset. If all that you do is use your income to fund lifestyle, the day the income is not there, what's going to fund that lifestyle? That lifestyle still remains. That mortgage, that rent, that utilities, all of those things still remains. So take some of that money and put it towards asset, right? High income, no asset. Yes, you know that you're confused. You want to do it. You don't know how to get started. That's why you're here. Click on that follow button and then come and learn how to go about it. One of the biggest problems of the middle class, that's why they're not building wealth. As a matter of fact, middle class pays the highest level of taxes. What do I mean? Dr. Avia, thank you for sharing out the live, and everyone tapping out the live. Thank you all for tapping out the live, sharing out the live. What does that mean? Because you are in a box. So at any 100,000, there is a tax bracket that you fall in. You now increase it to 150,000. You shift from that tax bracket to the next tax bracket. You go to 180,000. You move. It means that your tax goes up again. It means that you are earning more, so is your tax going higher. But guess what? The wealthy, and with real estate, you create your tax bracket. That is what real estate does for you, right? That's why when you have asset, that's what it does for you. Businesses, real estate specifically, because you can actually create the tax bracket you want to fall in. I want to pay 15%. Real estate can help you design that. As a matter of fact, I got with a vice president income, also a professor, teaching AI cybersecurity and deep learning, double income, and some more income, right? Of course, the rental income, double-digit income, double-digit rental income. I still got over $20,000 back from IRS. Yes. I don't file my taxes myself. I have professionals filing taxes. They've been in this space for over 30 years. So they definitely know what they're doing. They filed my taxes for many years, right? Over a decade. And I've never been, what do they call it? Audited once, or said that something went with my taxes once. But guess what? With that income, guess what? If I do not have real estate, I tell you, I will be paying at the minimum 50 to, after the at the minimum, I'll be paying at least 50 to $60,000 in taxes back. But guess what? Because of real estate, I got money back. That means that's about 80,000 or more. That's what I was able to utilize. That's because I own double-digit real estate income portfolio. High income, but no asset. The other thing is that you're depending on one paycheck. Oracle, 30,000 employees laid off. They did not have the courtesy of even calling them, HR, calling them to even talk to any one of them. It was via an email. Imagine you wake up in the morning, you get an email. 30,000 families impacted. That is not just 30,000 families impacted. That's one. Spirit Airline. Everybody heard about Spirit Airline. 17,000. Meta, 7,000 and still counting. Amazon. You can start counting these companies, right? These are big. These are thousands and thousands. Depending on one paycheck, I always say it's close to no income. One paycheck, you're just one paycheck away. Yes, I know that we don't want to hear it. We are praying to God. Trust me, I believe I'm a Jesus baby. So I trust him completely. But so is those 30,000 people. So is the 17,000 Spirit Airline. So that's why God has also given us wisdom, right? He teaches our hands to work, right? So if he's taught your hands to work and he has taught your feet to move, then you should also know that when you are making that income, don't eat with 10 fingers. There's one, my parents will say something, do not eat with your 10 fingers, right? Take some of them and put it towards where? Asset. Put it towards something that cash flow. Put it towards something, businesses, anything that would have an extra stream of income. Fingers to profit, right? And this is, the other thing is inflation. Inflation is taking 3.8% from you. Inflation. Real estate will help you address the issue of you have high income, no asset. It will help you. You will stop depending on one paycheck. As a matter of fact, real estate pays you in 6 different ways. Who wants to know how many knows the 6 different ways that real estate pays you? Who wants to know? Put 1 in the comment if you want to know. Put 1 in the comment and let's keep tapping out the live. Okay, you want to know. Who else wants to know? Okay, ADK wants to know. All right. Who else? 1, daughter of Yahweh wants to know. Any other person wants to know. And let's keep tapping out the live. Click on the follow button if you have and join the $1 Million League. Okay, God's Love wants to know on the YouTube side as well. Yeah, I hope you have clicked on that subscribe button if you haven't. Yeah, okay. Awesome. So 6 different ways. Before I will tell you 4. I may tell you 4, but it's actually 6. 1, cash flow. What is cash flow? And this is the time I always like my board. I need to bring my board back, right? I used to teach with my board. I'll bring my board back. It's because of the YouTube community that I stopped that because I don't know how to flip the screen around. But on TikTok, I can do that, right? So cash flow. What is cash flow? Whenever we talk about real estate, you buy a property. You put it, your property, and I'll put numbers behind it. Property is 200,000. And I'm not saying properties are always 200,000. Hypothetically, 200,000. There's something called your rental income. And there's something called the 1% rule. One of the easy ways to know that might be a good deal, right? I want to move forward for this investment property. You should give you 1%. Your rental income should be 1% of the property comes, right? Property is 200,000. Rental income is 2,000. That is close, it could be less than, or it could be more than that. But that we're getting somewhere. Rental income is 2,000. Right? Rental income from your tenant, right? That's what you get from your tenant. But because you get the bank, you put 20 because it's an investment property. You bought your first home. You already use FHA loan. So it's 20% down, right? So you have 160,000. That's what you now hold the bank. Now, every month, you have a mortgage of 30 years, let's say 30 years, 30 years mortgage, every single month you have to pay the bank back some of the 160,000 that you hold, that you hold the bank. That 160,000 every single month, you're going to, when the tenant pays you $2,000, you're going to pay the bank 1,500 because that's the mortgage. You repaying part of your mortgage, right? Part of how much your 160. There's going to also be property tax if you're escrowing. There's going to be insurance. They will pay it on your behalf, so you don't have to bother yourself, right? So that's the other one. So 1,500 out of this 2,000 from your tenant, the rent, you pay 1,500. You reduce your mortgage, right? 500 difference, right? You have 500 left. That 500 is something called cash flow. All right, cash flow. That is how you are paid, because $500 is coming into your pocket from the money that your tenant pays. That's one paycheck. Now think about it. Let's say you have 5 properties. You get 500 every single month, right? It could be more than that. It could be less than that. 500 every single month times 5. How much? That's 2,500, thereabout. As a matter of fact, that's part of the strategies. That is extra money on the side. So even if Oracle does whatever, I know you, at least you know that you can still feed and you can still pay your rent or your mortgage or whatever with 2,500, because you have some, this is coming from your mortgage, right? I mean, from your investment. That's one. The other, equity, is the first. Second, can somebody write it down? Equity. That's the first paycheck. I mean, cash flow. That's the first paycheck. Cash flow. Can somebody write it and I'll pin it? Then we connect with that person, right? Cash flow is the first thing, right? The first person that gets to write it will pin it. Okay. Yeah, we're going to equity. Sorry, I mean cash flow. Cash flow. Daughter of Yahweh. Then I'll pin. Opal after. Now let's go to. And let's connect with Doctor of Yahweh. Then the second thing is equity. Thank you all. Thank you everyone for responding to that. Second thing is equity. What is equity? Now you've paid the tenant, right? I mean, you remember your mortgage is 2,000, 1,500, right? 1,500. You paid that 1,500 that you are paying. Your loan is 160,000. Every single month you pay 1,500. 1,500 times 10 in it, that's 15,000. So that's 18,000. That means you're paying 18,000 to reduce your mortgage. Of course, it's not going to be exactly, because they're going to be doing there's something, what did they call it? I'll remember, right? They focus on the interest in the lower years. I remember that term, right? So it might not be, but just think about it. Over time, averagely, you're paying 18,000. That means you're reducing your loan with the bank. Over time, 30 years, you're going to would have paid everything 100% off. 100% off in 30 years, basically. That's what it means. So that whenever you are paying, remember you paid, let's say 15,000 year 1, 15,000 year 2, year 3, year 4, 15,000 times 5, that is $75,000, right? 75,000, that means your mortgage would have reduced from 160,000 to what? Maybe 130,000. Or, because of course there's also equity, there's also escrow in that money that we talked about. So it would have reduced. Guess what? Property is 200,000. Now, let's say now the property is now, your loan balance is 130,000 it means that you have equity of 70,000 in this property. That is equity. So the second one is equity. Second is equity. That's the second paycheck that you have. And you'll be like, okay, but how is that a paycheck? The money is locked in the house. The money, you can take the money at any time. As a matter of fact, I talked about, how we got into real estate, which was 529. We're doing 529. We saw it wasn't working. We said, okay, we'll use real estate. And we decided to use real estate. Now, how are we going to fund kids' education? That's part of the strategy. Because whenever it's time, two things: they get a scholarship, we don't need it, we don't touch it. When the kids graduate, who gets to own the house? We give it to them, because it is your 529 money that we used. But guess what? Even though we put, it's 529 money, but the majority of that money is what? It's the tenant that's money that you used in paying me to pay the bank. That's equity. But let's assume that the child did not get scholarship, right? And of which I'm going to conk your head if you're not getting that scholarship, because but let's assume that you do not get a scholarship. What are we going to be doing? Would take what? Equity from that property. You can take cash out refinance, or you can take home equity line of credit where they dump that money inside your bank. Is like a line of credit, right? Just like a line of credit, but it is tied to that property, and we use it to pay the tuition from there. It's what you use, that's what you pay. What you use, that's what you pay. And that is, guess what? The tenant is still going to be paying, right? The rent, you remember, the rent is not going to be the same thing. As a matter of fact, one of the properties that we bought, initial rent when we started about how many years ago was 1,800. Now it's about 2,100, 2,200, thereabout. So guess what? Let's assume a child at year one, by the time the child turns 18, the rent would be at least almost double the price, the cost. So even though if you have to take money and fund the home equity line of credit, and we still fund this, which would have almost been finished, this particular loan would have almost been finished. Guess what? The child will go to school for from the tenant's money, but they still have the property. So those are some of our strategy, right? Equity, you can easily take the money out. 75% is what you can take out of that. What we said earlier, 70,000. You can take 75% of that money. You can use it to fund another asset, buy another asset. As a matter of fact, maybe you would have heard about the BRR strategy. That's part of the BRR strategy because you can do it multiple times, right? So that's the second way, equity. Then the third one. So first is cash flow. Second is equity. Third is appreciation. You see, this too is just minimum. It doesn't even mean anything. It's little money. You see, appreciation. Now we're talking. Appreciation. Somebody puts in the comment appreciation, and let's keep tapping out the live. And if you have not, if you haven't connect with daughter of Yahweh, you can see she's very locked in. Let's tap out the live. And you've been sitting here for more than 4 minutes, 5 minutes, and you have not clicked on the follow button. There's something that got you stuck here, that got your attention, that you have not scrolled, right? Make sure you click on that follow button right here so that you join the $1 Million League, and make sure you click on the subscribe button on the YouTube side as well. Awesome. And we're talking about why do middle class not put money into real estate, but the wealthy do, right? That's what we're talking about. So, and now we're on the different paychecks that you get from real estate. So, appreciation. Remember, for those that were here, the past 3 days, we talked about rule of 72, how long it takes your money to double, right? In the stock market, how long it takes your money to double. In real estate, there's a different rule. Real estate doubles itself every 10 years. As a matter of fact, the property that we bought, June of 2017, July of 2017, that's when we closed. July of 2017 already doubled this value. So it has already doubled its value earlier this year. So it means that it's even in year 9, it has already doubled its value. That's a function of if you buy it right. If you're going to do bidding war, you're on your own, right? But if you buy it at the right market value, your property should double its value. So it simply means that you also have property doubling its value. That is, you buy a property 200,000 and then the property becomes what? How much in 10 years? It becomes 400,000. Your 400,000 property, just the same way, compounded, 400,000 property becomes what? It becomes 800,000 in 20. So that is what real estate does. And that's why I said that a lot of, when people tell you rent versus buy, and that's why I said, don't fall into that. If you see the institutions, if they are buying single family homes and they are telling you to rent, why are they investing into it if it's not a lucrative business? I will tell you it is. The property that we bought, because I always buy my property at 80% of the value. So I do not, most of the time I buy off-market deals, right? 80% of the value. Bought one, we bought it 2023, bought it for 180,000. That property right now, as I speak, as at that time, if I was going to sell it, it was worth 250,000. But I tell you now, the property is worth 320,000. That is how much in 2 years. Let's even say conservatively 300,000. That is 120,000 in 3 years. One property. That's what real estate does for you. One property. And this is outside of the fact that somebody has lived in that house. As a matter of fact, that particular house, just to give you the person that wanted to rent it was formerly incarcerated, but this was when he was younger years, right? This person is in his, this was like 20 years ago. But remember, America never forgets. So whenever you want to do anything bad, always think about it. America never forgets. Even if it's 50 years ago, they would remember. So don't even make the mistake. So because of that, nobody wanted to give him the opportunity. But because of the way I always, real estate for me is part of it money, part of it adding value. My goal is to add value to people's life. That's why right now we're in a CSR, corporate social responsibility. Whatever I'm doing right now is to help as many people as possible. All of the pricing in our store right now, everything is CSR. We are teaching all of these things for free, just so you can learn how to build wealth, right? So I always want to add value to the society. Like when people make money, what's going to happen? Crime is going to reduce. When people make money, poverty reduces. That is how you make a society in your own little way a better world. And that's what I am doing here. You learning. So you also tapping out the life, sharing out the life. That is also you giving back. Because when you tap out the life, algorithm understands that, right? That's the only language they understand. You do your daily at me, you share out the life. You are also bringing some other people to come and learn how to make money, how to invest their money the right way, instead of, living in financial fright every single time. Now they know that they can start investing in real estate. Become a fan, get a daily at me as well. That's one penny. Awesome. And everyone tapping out the light, thank you for doing that and sharing out the life. So having said that, so think about that person. Guess what? He had money because he just sold the house and he's been living in an Airbnb for almost a year. This is real life story. Almost a year, because no other landlord, and that's why I say have a decent credit, because even before me, I give you a house, you have to have a good credit. You have to, your criminal record, your housing record, we check all of that. We do a full background check. So this person was very upfront, but he had the money, he sold the house, and for some reason, family issues and all of that, he was living in an Airbnb for a whole year. And it was Christmas time. This was 3 years ago. Christmas time. And maybe he prayed or whatever. For some reason, he came to my desk. And of course, within the team, we checked, right? What do you think? There's no loss. And the guy was like, okay, if you give me the opportunity, I'm going to pay you a whole year. 1 year. 1 month rent is 1950 times 10. 19. Hold on. It was 2,000. So he paid $24,000. 12 months. And then because of the criminal record, to also protect myself, I asked for 2 months down payment, security deposit. That is additional 4,000. So paid cash $28,000. Guess what? What more does? Carry the same money, go and use it to buy another down payment for another property. That's what. Guess what? That property bought it for 180 and fix it for 10,000, 190. That property, as of today, they reach out to me. It's what? 300,000. That's the same one I talked about. Aside the fact that 1 year I got $28,000. On top of that, That tenant is still one of my loyal tenants, right? Keeps the house clean, doesn't call me on anything. And that's why I give people opportunities as well, chances. Guess what? It's been there. This is done year 3. Year 1, 2. So it's paid 24,000 3 times. So 24,000 plus, that's 28,000. Another 24,000, 24,000. That is how much? 48,000 plus 28,000. That is 68 plus 8. That is 76,000. 3 years. Property is that much? 180,000. As a matter of fact, it's one of those ones that we bought cash. 180,000. 76,000. Guess what? And it doesn't look like someone that is going anywhere. If it continues like that, of course, rent is going to increase this June, 2,100. 2,100 if I do it for another year, 25,000. 25,000 if I keep it like that for another 2 years, that's 50,000 again. If it does it another year, 75,000, guess what? 150,000. If it stays another 2 years, and I mean, as a matter of fact, if it stays 5 years, all my money in that property, I got it all back. And in another 5 years, I tell you that property can never be less than 350,000 to 370,000. With property doubling its value, that's not even if it's 400,000. Guess what? If I'd left that money in the bank, 180,000 for the past 3 years, what I would have gotten, 100,000 would give me 0.01%. I would have gotten $10,001. So I would have gotten $10, $10, $10, $10. I would have gotten $10 beautiful dollars if I left that $10. No. That's $60 because it's 180. $60. That $60 is what I would have gotten for the past 3 years. But what have I gotten? 76,000 plus another 120,000. Let's even be conservative. Yeah, another 120,000 because there's no conservative, the property is worth 300,000. So I have conveniently made 120,000 plus 76,000 in rent. That is 200,000. But then let's even say I pay taxes, of which, because of my high income, I'm able to reduce my taxes. So technically, the repairs of that 10,000 I talked about, I was able to claim it back. So, I don't even want to start. So that is the beauty of real estate. So tell me, I'm a vice president of technology. Another person, right? Dr. T. Dr. T is a vice president of technology. We earn the same income. I put my own this way. Dr. T puts his own in the bank. Or let me not look Dr. T. Let's say my friend Opal puts his, right? And daughter of Yahweh puts his own is here. And then Opal puts his own here. Please, who is winning? Opal, I specifically mentioned it because I know you would. I know you react. Yeah? That's why you have to, right? I know you have already done the ETF, but I'm on your case. So who is going to be this person who is Dr. Lina, 200? And I can give you so many instances like that. So many instances like that. 200,000 on just one deal in 3 years. Now, I'm not saying that all deals are going to be like this. But then even if you make half of this in a year, 100,000, what you get from your bank is $60. 100,000 versus $60. If you do the same thing, using the same principle. So those are the ways that, guess what? The multimillionaires, that's how they build their wealth. So now let's take ETF, for instance. If it has done 10%, 7.2 years. I've done this. I've almost doubled this money in 3 years. Can you buy a property with cash in the bank? Absolutely, yes, I did. This exact one was cash. This exact one, you just need to have a trace, right? Because of money laundering. They need to have a trace. Okay, where's the money coming from? So far you can prove it. That's it. That's all that it takes. People save money. I told you of the story of my friend that paid tax of 70 without. Can you buy a property with cash without the bank? I don't understand. Daughter of Yahweh, can you put everything in one line sentence so I can interpret it the right way? I'm not sure what you mean. Can you buy property with cash without cash? Or do you mean that? Can you buy property with cash without the bank? I'm not sure. Write it in full so that in one sentence so I can be able to. And let's keep tapping out the life and click on the follow button and join the $1 Million League. Real estate is one of the strategies that we use because guess what? The multimillionaires, that's where they put their money. All right? That's where they put their money. Awesome. So, can you buy property without a cash? Yes, absolutely. You can, but you have to do the legwork. You have to do the legwork. Okay? Welcome here. And you have to do the legwork. There are strategies around it. And if you want to know how, we have a full course to teach you that. Is either you have the money or you have to, how do I put it? You have the money or you have the time, right? You're trading a little bit of your time. So strategy like wholesalers, there are ways where you can actually start it that way and then you build your capital or the equity is in that property. There's things called, the private money lender, right? The hard money lender. You can utilize it and whereby you get the down payment. But guess what? That down payment is in that deal, right? It's in that deal, right? Such that you can, once you get that deal, you pay back the private money lender or the hard money lender, and then you have the house at no deal, at no money in it. So those are part of the strategies. That's why I say, when people say, I don't have the money, right? And as a matter of fact, when you say you don't have the money, do you have $27 every day? Do you have $27 every day? Because let's address that. Because some people spend more than $27. Who has $27? Put one. I have $27 every day. Put one in the comments. I can afford to save $27 every day. Put one. Let's see. I don't have. Put 0. And let's keep tapping out the live. Click on the follow button. And this is not, because this might just help you. I have 20. You're not giving it to me, by the way. I just want to give you strategies. Whenever you say, I don't have the down payment. Okay. I can afford. Okay. Somebody said, I can afford. I can afford. That's it. Daughter of Yahweh. All right. You see, now, see, these are two people. Daughter of Yahweh and Opal said they don't have, Dr. Oh, so good to have you again. You all said you can afford $27 a day. $27 a day. How much is it in a year? 365 days. $10,000. That's it. All that, if you have never bought a property before, all that you need is $10,000 or a little bit, $12,000. That's all that you need to start buying your property. Remember I said I was going to give you a tip. Remember I said I'm going to address the issue. That's so if you have 3 people already confirmed I can afford, right? They said they can afford. Enoch Creation, I know that you can afford that 27. The reason why I know is because people, see, that lunch, that coffee, that's $27. Lunch and coffee, skip that lunch and make it from home. $27. How much is your lunch? If anybody cares to share, we've already passed lunchtime. How much did you spend on lunch today? How much? We're a family now, especially if you click on that follow button. My YouTube community as well. Please put in the comment, how much did you spend on lunch today? Because I always say this, how much? And how much did you spend on coffee? Lunch and coffee for coffee lovers. Lunch and coffee, how much have you spent today? Sometimes you can spend on Uber. Yeah, I brought lunch from home. Good. See, that's it. And then you save. But people, averagely, how much do you spend on coffee? Let's say you did not bring lunch from home. How much do you spend on lunch? You're going on a team. Your team is saying, okay, how much do you spend on lunch? Well, yeah. How much? Somebody put in the comment. Sometimes you can spend on Uber. I mean, if Uber is what needs to take you to work, well, and you don't have an option, right? That's a different thing because you need the Uber to take you, you know, homemade food, period. I'm not saying every time. I mean, at times it's okay to do your, but how much is your lunch? How much? Let's just even address. You know, I say this every time. $20, depending on what you buy for lunch. Thank you. Any other person? $20. Any other person will pass her $20. Because let's put it to rest. A lot of time people say, I don't have money to invest in Roth. I don't have money to buy real estate. I don't have money. I don't have money. The money is not enough. I'm trying to help right now. How much is that lunch? Any other person wants to share? Opal, Queen, daughter of Yahweh, ADK, Enoch, MCOP, Adetu. MCOP, you always ask questions, so respond. Dr. Adetu, Jerome, JD, Saji, James, just, yeah. How much? $10. Okay, $10. What are you buying that is $10? What are you buying? Don't tell me that is $10. Yeah, okay. So let's say averagely. How about coffee? Right? How about coffee? Yeah, I know that it's more than in these days it's more than $10. That one. Even if it's McDonald's. Yeah, even McDonald's right now is not $10. I tell you. That one, if you want to buy Happy Meal, right? Or you want to buy each Chick-fil-A, how much is it? A whole meal. It's about $12 now. Everything has gone up. You know, gas is, yeah. All right, snacks. Okay. We're talking about a meal. You buy snacks. All right. So any other person cares to share? Coffee. I know that one is about $5. So $20, $5, that's $25, right? Just had $2 to it, that's $27. That is $10,000 a year. Then that $20, that is $7,500 that you can use in filling up your Roth IRA. Maxing out your Roth IRA is $7,500. $10,000. If you want to know how to waste $10,000, $27 a day. You want to know how to get $10,000, save $10,000, just do $27 a day. Now, to buy a property of $250,000, you need $8,750. Then add closing costs to it, so about $12,000. That's how much it costs for FHA loan. You're a first-time home owner. As a matter of, I remember the client I mentioned. That's part of the calculation that we did. And she was, I mean, she's able to save $1,500. So by December, she's buying her first property instead of thinking it's 5 years. So I hope I resolved your problem, daughter of Yahweh and Opal. Both of you did say you do not have, it's lack of funds. And of course, I know you were just, yeah, that's it. So you are the only one that is taking you from not buying your property by this time, June of 2027. And I'm going to be looking at both of you because 2027 is around the corner. You already said you have the 20, and Dr. Adetu, right? You all said you already have the one. Yes, so I'm holding you guys accountable. Yes, that's what we do in this community. This is the $1 Million League. We're not joking and we're not playing around. So better start saving your $27. Good thing is that both of you make food from home. Start saving your $27 and start putting it towards that property. Everything that it takes you for a $250,000 property is that. Now, yes, and Dr. Adito, yes. Yes. All right. Another thing that I want us to address before we go, I am going to take up the challenge. Absolutely. As a matter of fact, talking about challenge, we also have the money reset challenge in June. Yeah, how can I save the $27? You can be sending it to me. I'm just kidding. $27. How do you save it? You can do it this way. 27 times 30. How much is that? Do the calculation. 27 times 30. If you get your money every paycheck, every 2 weeks, 27 times 15 days, right? 27 times 15 days. So that's 27 times 10. That's 270 minus 135. That is about 370, 305, thereabout, right? Every 2 weeks, right? That's it. So every paycheck, as you are getting that paycheck, right? Automate it and let that amount go into, you can put it in an IU savings account, or you put it in an ETF, right? Your investment account, put it in there. So every paycheck, that money goes in there. Remember, we have your wealth account. Let it go there and you buy the ETF or asset, or you can put it in an IU savings account. I prefer the ETF because the money will grow faster, right? Put it in an S&P 500 right there. Let the money keep growing. By next year, it's not going to be $10,000 anymore. The extra 2,000 that you are looking for, remember we said it's going to be about, with closing costs, 250,000, 8,750 is the down payment using an FHA loan, because that's 3.5% thereabout, using an FHA loan, right? And then you need your closing cost. So at least it's going to cover your down payment, and then the interest or the return on your investment, your closing cost, is your return on your investment is going to cover your closing cost. That's how it's been done. Can we put it in SEP IRA? That's for personal business. That is SEP IRA. That is for business for retirement. I rather put it because that is, you are self-employed, right? Because IRA is for, what's IRA? Retirement, what's it? Individual retirement, what's the A? Individual retirement, whatever. If somebody can help me, right? So it's for retirement. I'm not sure. I think SEP, if it's retirement account, thank you. If you take money from there before retirement, I believe there is a penalty, except that you can actually take a loan and pay yourself, because I know you can do it in 401k, where you can take a loan from your 401k and then you pay the interest, you pay yourself back you start paying back and with the interest. So it's almost like you're paying yourself. So I'm not sure. So if you can do it with the SEP IRA, absolutely. However, instead of you stressing yourself with that, just put it in a brokerage account. That's it. Put it in a brokerage account and, let the money grow in your brokerage account. So I just, individual retirement, accounts. Account. Opa, I like it. Arrangement, yes. It's arrangement. It's A. I agree. Individual retirement agreement. So, yeah, and let's keep tapping out the life. Can we get it to 20,000 today? And let's share out the life. Also, we'll soon be wrapping out the life. We're talking about real estate, and we're just talking about how to raise that down payment, right? Movie Silence, welcome in. Tony, welcome in. I am the queen of SU. Oh, wow. Beautiful. I love that. Let's keep tapping out the line. Make sure you click on the follow button and join the $1 Million League. This is part of the strategy that we teach here. We just talked about $27 and how you can buy your property in 1 year using $27 strategy. We've shown you how $27 in 10 years can become your 1.6 million using the ETF. Now, this is $27 strategy again, being used to buy your property in 1 year using an FHA loan. So these are strategies that we teach here. So we're not, like I said, it's not get rich quick scheme. Here, it's about strategies. Trust me, you do it year one, you buy property number one. I think you can only do FHA, but guess what? This is house hacking, because you're going to live in that property, remember, and then stay some part. You can rent out some of the property, stay, because FHA, you have to be a primary owner. You got to be your primary resident for 2 years. Stay there, and of course, move after 2 years. Do it again. So stay there and rent some of the places. You can rent out rooms. You can stay in the basement if you have a small family and your tenant stays in the main building. It really doesn't matter. It's of you building wealth, right? Or you can buy a duplex, right? Where you stay on one level and the tenant stays on the other level. Most importantly, for you to use FHA loan is that you have to be living in that property for at least 2 years. Do it again, move again, start saving money again. Remember, you even save more than $27 this time when you have bought it next year, right? Opal, Dr. Adetu, and Dr. Abiyawi. Right? When you buy it next year, because I'm holding you June next year. So go and write your vision board, changes, moving silence. William Quaife, everybody that is already click that follow button and is already a part of this $1 million league. That is for you. June next year. So you stay there for another year or it's another 2 years. By that time, you are living rent free, right? Living rent free. And then what's going to happen when you live rent free? It means that you have more disposable income. That means you have more savings. It means that by year 3, the property, you can even buy another property because you already have not just the $27. You're still saving your $27, but now you not even have way more. Do it again and again. And guess what? You built yourself $1 million empire. That's it. That's how you part of the ways you turn that your 9 to 5 income into real wealth. Okay? So instead of you letting inflation eat the money away. Another thing is, always remember rent always increases. Like I showed you earlier, 1900, 2000 was the rent, 2100. Good idea, but may count as my third property. Meanwhile, the strategy can definitely help me. Absolutely. It's not going to count. You cannot, except except you want to move. If you want to, then you can do the 20% down. That's investment property, right? Do the down payment. Godwin is welcoming. Do the 20%. JK welcoming. 20% down, right? For investment property. So then do it. There's no limit. I mean, I own double-digit real estate portfolio. It's me, right? It's me right there. So if you have 3 already, this is what this community does. If you're a millionaire, if your goal is to become a millionaire, we help you get there. If you're already a millionaire, we help you scale faster. Don't think you have arrived. Because by the time you're saying that, oh, you know what, I'm already a millionaire, then you think you have realized. You'll be surprised at people that are here. They're already multi-millions. Not in 1, 2, 3. And they are just dressed like, they are not in the Gucci's and whatever. They're just dressed like normal. Not even making their hair. No makeup. All right. Can you please summarize the $27 strategy to lead to $1 million? I'm just coming in. All right. I'll say it again. 2 strategies, right? 1, let me talk about this one we just talked about. $27 a day. Take that money. If you're a first-time homeowner, you've never bought a property. For you to buy a property of $250,000, you can use something called FHA loan, which is 3.5%. That's about $8,750, or maybe more. You can use your calculator. You need also the closing cost. $27 a day times 365 days is $10,000. All you need is $8,750 as down payment, but then you need closing cost. Every single paycheck calculated, because you don't want to be doing $27 a day. $27 times 30. You can do it as a lump sum every month or every 2 weeks. Let the money automate the money, let it go either to IU savings account, give you 3.5%, or you take it and put it in an investment account, brokerage account, giving you about 10 to 15% depending on the return. But know that it's more riskier because it's exposed in the market. But it is not the stock. It's not stock. We're buying ETF. Right? So, or at the end of the 1 year, you have $10,000. All you have to do is take the $10,000, pay for your down payment, 3.5%, right? Using the FHA loan, 3.5% down. And of course, your closing costs, remember your $10,000 returned maybe 10% for a whole year. As a matter of fact, S&P 500 returned 18%. So that means you probably have, if you did like last year, you would have 11,800. That is almost enough to cover your closing cost, right? That's enough to cover your closing cost, which is about another 2,000, 3,000. And if you have a gap, When you're looking for 1,000, trust me, there will be, even me, I'll give you the $1,000 if there's any gap at all. But that should be sufficient. But you understand the drift. So that is the strategy for you to buy property. But with FHA loan, you have to live in that property. How do you live in that property? Right? Typically, I would recommend house hacking. If you have a smaller family, right, you can live and you're in places like the houses have basement, right? Live in the basement and, of course, rent the main property out. If you are a big family, rent out the basement. Basically, you're house hacking. Or you are single, you can actually live in one room and rent out the other room. Or you can use the other rooms as short-term rentals if your house is close to, whatever. Take then just stay there for a couple of for 2 years, because it requires you to stay there for 2 years. That's house hacking strategy. Once you have that, after 2 years, because you're using other people's money to pay the mortgage, right? You should have extra money in your pocket because you're not paying. Or if you're paying, you're just supplementing, right? Now, you do the same thing. You're saving still $27 continuously. You should have another down payment. And then you should even have more money. Then you can go and either do an investment property, 20% down, or do the same thing, an FHA again. That's it. And also hack again. Move, but you should be ready to move. So that's the strategy. Another strategy is $27 can get you to $1.6 million in 10 years using the ETF strategy. So that's it right there. Does that answer your question? Edward, does that answer your question? And let's tap out the live and check if you have been sitting here for more than 5 minutes. Check, I know a lot of time we are all locked in. Check that you have clicked on the follow button. If you haven't, click on that follow button and join the $1 Million League. What if I already had my first home since 2022? Then it's not working for you. Just look for your 20% because this, but then you can, except you're ready to move. If you're ready to move and, move, and because it has to be your primary home, right? It has to be your primary home, okay? It has to be your primary home. All right. So another thing is inflation, and I'll just quickly, another thing that people go, if you leave your money in the bank, inflation is taking 3.8%, right? Inflation is taking 3.8%. And then all that you're doing is you are saving your money in the bank. Know that inflation is eating 3.8% out of your money. So that's part of the reason why the wealthy people don't put their money in the bank. So if you put your money in the bank, I'm sorry to tell you, your money is only doubling 7,200 years at 0.01%. And then inflation is also eating deep into it. The other thing is that I know people fear the investing. If you need all the education, then get the education that you need to start investing in real estate. Another thing, I'll start later, right? Procrastination. That's why I've told 3 people. Edward, you have now joined the group. Edward, Opal, daughter of Yahweh, Dr. Adetu, right? All 4 of you. Now I'm holding the 4 of you accountable, right? You're not starting later. You're starting today. And as a matter of fact, I give you to tomorrow, your $27. Make sure you start doing it, okay? You start doing it. Yes, keep laughing, Opal. I'm on this, your matter. Yes, because it worked for you. It worked for you. You opened your ETF, your investment account, right? And you came back to tell me. So since you came back to it, means that you have seen me as your coach, your wealth coach. I'm starting with the next page. Oh, that's what I'm talking about. That's it. Yeah, that's it. See? That's what we do here. Accountability partners. 31st. See, she even put the date to it. Come on, girl. That's what we're talking about. Yeah, she's putting the date to it. Please don't just put the date one time. Make sure that it means that by 31st of June, 31st of June, 31st of May 2027, better have that 10,000 plus more. Right. How to invest and buy real estate. There is a course and I'll show you where to buy it. We've been talking about everything ETF. We talked about that the past 3 days. The cost, and I'll show you where to get the cost. Right now it's at $27 because in the spirit of $27, the regular price is $297, but we are doing CSR, corporate social responsibility. That is what it is. That's why the spirit of 27 is flying in the air. So it's $27 and it's for a limited time. Very, very limited. Before you would say, okay, I'll show you. So not understanding real estate. If you do not understand real estate, then get the education, right? As a matter of fact, I'll tell you something. And tomorrow, I think we'll continue tomorrow about other paychecks. So we talked about appreciation, we talked about equity, we talked about cash flow, but there are some 3 other paychecks that you get with real estate. Okay, we'll continue that tomorrow. All right, but then you want to learn how to buy real estate, how to buy your ETF. Let me show you where to find it. And like I said, right now, everything we are at the CSR.
All of the slow parts out, and then we will take a vote.
Are you going off? I don't understand you. I think you went off. I have to understand how to figure it out as a self-employed. As a self-employed, you see, I want to figure it. See, what did I say? Analysis paralysis. Is analyzing paralyzing it? Analysis paralysis. See, Dr. Two, I started using the doctor knowledge to say, I need to figure out how to, let me put this on the charger to show you. Yeah, but, okay, let me take my laptop and show you. You know, analysis paralysis, start with your $27 first and start saving the money aside. And then you figure out how to do it. I do not understand. I'm trying to understand why you're using self-employed, why you cannot just open a brokerage account, right? That one is super easy for you to understand. But then guess what? You just want to do the self-employed, right? Because it doesn't even have anything to do with either you're employed or you're not. All right, it doesn't have anything. So I'm trying to understand when you say I want to figure it. That is, retirement account is different from brokerage account. You don't need to, so you can put money in brokerage account. My 15-year-old, right, already has a brokerage account, right? A custodian brokerage account. So it doesn't, and he's had it since maybe 4 years ago. You don't need to be employed. A 5-year-old, a friend told me a rental hall is available for sale. Do you think it's a good investment? There's a lot of things that goes into that. What is the location? Right? What is it? Because that one is you're now going to real estate as a business, right? So that is real estate that's real estate. Hey, I'm Mabel. How are you? That's real estate as a business, right? So what does that mean? It means that you need to do your analysis. That one is a business. It's just that real estate is not a part of the business. We need to know the location. What is the return on investment? How many events do they have every year? What is it close to, right? All of those things are supposed to, what is the cost of operations? So many things that needs to go into that, right? But of course, it's always, just get that data. That data is very important because, because it's a function of, it's a function of what is because your goal is not the building in itself is not, except that you are not going to be running the rental property. I mean, you're not going to be running the event center, right? The hall. You're not going to be running it. You're going to be renting it you want to rent it long term to people that want to use it as a business. So those are the things. Are you renting it as long term to somebody to say, okay, give me my money every month? Or are you renting it to say, okay, I want to use it for events? Those are the things that goes into it, right? So I hope that answers your question, Edward. I hope that answers your question, because it could be a good one, but if it's also is a dead end, there's no event there, or there's nobody, then it's a bad one. It could be good, it could be bad. It's all about data. So for if you want to know, someone asked about ETF. So go on my page right here. You would see, click on it. You see nestu.me forward slash, and you find it on the YouTube side as well, right? And then click on open anyway. It tries to keep you. That's the only link that you find on my YouTube as well. And then this is it. How to invest in real estate. How to smart investing workshop. Turn your income into real wealth. So click on it, and right now, like I said, it's $27. In the spirit of CSR, in the spirit of $27, that's the first one that you can do today, right? And you can start, you know how to put the money into ETFs and all of that and start generating money. That's that one. And then for those that, for real estate, we have a course right here. So I don't know how to go about it. Now I've already taught you how to get the down payment, right? You want to know more, the financing, the how to not to become a slave to your tenants and all of that, right? That is right here. Right now it's at $79.99 or something. The regular price is $497. So everything that you find in here, it's all at a CSR, corporate social responsibility prices. So it is for a very, very limited time. So once the time is over, then the time is over. And lastly, just to show you, the Wealth Building Academy is right here. This is the free training, that live training, by the way, on June the 6th. It's going to cover how to increase your income. We're going to be talking about things like LLC, protection, all of that. We touch a little bit on smart investing, but not as in depth. We touch also real estate, because those are the 4 pillars. So things like living trusts, insurance, all of those things are things we'll talk about. Discipline, financial planning. As a matter of fact, I teach 4 pillars of wealth creation. I teach you how to start with your income first. All those 5K hustles. How can you go to college for free? Dr. Fatima is coming to teach that. She's the executive director of graduate admissions and scholarships in one of the leading universities in California. She'll be the one teaching. She was here on Sunday during the family and finance. So you don't want to miss, you want to come learn that. We have a chief information security officer with one of the leading places in Texas. Dr. O will be teaching AI cybersecurity. So if your goal is to pivot to AI cybersecurity, AI field, he's also a professor teaching that in the university and the colleges. You want to come learn. All of those people are doing it for free, right? Of course, you can hear the big names. They are doing it because it's me. I'm asking, like I said, all the prices right now, CSR, it's the period where we are like, okay, let's just give back. God has blessed us with knowledge. God has blessed us with finances. Let us give back. Teach as many people. So how you can get AI cybersecurity knowledge for almost free, or how can you pivot, right? I pivoted from finance. I'm an economist. I'm a chartered accountant. My bachelor's is in economics. And also I'm a chartered accountant. And from there, hey, Christ in me, it's been a minute. How are you? Right? And then then I started working in the top 500 companies, or maybe even top 100 in corporate finance, right? And then I saw I was doing a lot of work, and my income was nothing compared to the people in technology doing the same lesser work compared to me, doing the same thing on the finance side. So of course, in the spirit of working like an ant and eating like an elephant, I decided to pivot, increased my income by 30,000. That was about 16 years ago. Increased my income by 30,000 in 5 months with less than $500. I did not go back to college, People often make that mistake. I did not. It took less than $500 to increase my income. And, because I need to start with your income, except you won a jackpot or you have a family inheritance, your wealth starts with your income. So if your income is, as a matter of fact, for people that are a part of this community, the $1 million League, one of the requirements is for you to start with a six-figure salary or six-figure income. If it's okay if you don't have that six-figure income, but let it be your goal. But then we are not just leaving you. Biobi, how are you? We are not going to just leave you to it to say that, oh, you know what, go figure it out yourself. And because of that, you cannot be a part of this community or blah, 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 blah. No, that's why we're coming to support you, enable you. I'm telling you my story right now. I moved from the top 500 and I moved to oil and gas, right? And started my career in technology, not with another degree, not with any student loan, $500 less than 5 months, increased my income by 30,000. Absolutely amazing return on investment. Best $500 spent and best 5 months spent. Started working less hours, making more money, right? And of course, started jumping, right? Jumping, and I rose to the position of the vice president. I did not get I did not take another degree until 6 years after, or even more, when I went for my master's in information systems, right? A master's in business admin and information system. And then, hey, and Fan just joined the $1 million League. Congratulations to you. And then it was then that I now moved from there till I was like, okay, let me continue, and got my doctor in business information system. So whenever I say it's business, doctor of business and technology, that's what it means. So, and I did not, even as a vice president of technology, the certificate really did not contribute anything. Maybe as an AI professor, AI cybersecurity, deep learning professor, yes, the certificate, my doctorate degree contributed to it. But what am I trying to say, right? I'm trying to say this because you do not need to go back to college. A lot of times I see people, they are lawyers. You went to law school, then you come to migrate to this country, then you go back to nursing. And I'm like, because everybody says, oh, it's nothing, then you go that direction. Come on, you don't have to. Because I always ask people, what is it that you never went to school? Why didn't they don't have the money? And then even if you have to go back to college, that's fine. I don't have a problem with it. But do like what Dr. Fatima did. Dr. Fatima has 4 degrees. But guess what? Never paid a single penny. Not a penny, not even $1, a penny. Not a cent. Everything was college, gone to college for free. She has 5 siblings. All of them college free, debt free. So those are the things that we teach here. What are certifications? So you probably see certifications on my wall. Some of those certifications that you can take, less than $1,000. Guess what? You are there. ML, right? Engineering. There's so many other things that you can do. Guess what? I am up there, vice president of technology. I can tell you, I'll take somebody that has the skills, knows it on the book, that versus somebody that brought one certificate and knows nothing. I'll be quick to lay you or fire you. But the person that has, but knows it, I'll take that person. So employers pay for the skills. They pay for the knowledge. It's not about that in that certificate. So those are the things that we're going to be teaching. How do you get to that 6-figure salary? Because with the 6-figure salary, yes, that's where we're like, okay, you are here now. But guess what? Keep your income here. This here is what we need. This is what you are giving this community. Not giving us, but this is what you are sacrificing for the next 10 years. Income, expense. My YouTube channel is Money Talk with Dr. Lina. Money Talk with Dr. Lina. It's the same name. On my Instagram, I'm Money Talk with Dr. Lina. Everywhere on Snap, I'm Money Talk with Dr. Lina. I even have a much larger community on Instagram. So go and follow and subscribe. As a matter of fact, subscribe to my YouTube channel. I'm even glad that you talked about it. My YouTube channel is on right now, is live. Go there and subscribe. Absolutely. And I have long form videos for you that would help you, right? Because they are different. There's attention span on YouTube is on TikTok is like this 30 seconds, 1 minute, you know. But on YouTube, you have 10 minutes. So it's like an entire class where you can sit and we're like, okay, let me spend 10 minutes to build on my knowledge. So they have those that are there for you. So my goal is to reach as many people. Reach as many people. Because guess what? To get to that $1 million status, it's not hard. I've just given you two. We talked about the one for ETF. We talked about the one for real estate now. And I can tell you way more. There's way more. Way more. It's not, a lot of time we overthink it. You think that, oh, it's in the big, big things. You'll be so surprised it's in the little things. I tell you, Opal, Dr. Adefu, Edward, Automat, Fan, right? Adventure, Daughter of Yahweh, Biobi, Mayalistic, MCOP, James, and Mabel, Jen, Adventure. Guess what? If I tell you that, okay, you know what? If you only have to be saving $50 or $50 every day for the next 5 years, and you don't have to keep working, you don't have to work after that day, after 5 years, would you save it? Would you do it? I bet yes. But it's in all of those little, you are talking my interest. I want to work in oil and gas, already had my first degree. Any recommendations? Join have you registered for the Wealth Building Academy? Because that's that's the first one right here. It's free, but registration is required. Free, but registration is required. But any recommendation? I mean, I don't know your first degree. What's your first degree at? My desire is to complete my education without a loan. So far, this channel is my best course of info. Yeah. It just made me happy. It just made me happy. It just made me happy. Make sure you register for the class, because Dr. Fatima was here this last Sunday in Family and Finance. And don't miss Family and Finance. It's going. I think we'll move it to 7 p.m. This Sunday. We'll start changing time around because of the holiday and the summer, right? Don't miss it. But Dr. Fatima is going to be back June the 6th. June the 6th. You've registered. Great. I was asking, what's it called? Edward. I was asking Edward. Make sure you register so that you don't miss out. It's free. And you want to learn how to smart investing. It's there for you. Real estate, I am afraid I don't have the education. It's there for you. I told myself beginning of this year, anyone that comes across me, you will be the only reason, and I'm glad that Mabel said the same, like, I might complete without a loan, and this is helping me. Guess what? I told myself beginning of this year, everyone that crossed my path, by the end of the year, you'll be the one to say, okay, you will look back and say, oh, I'm the reason why I did not build wealth this year. Because if you came across, you would find a reason you have 1 or 2 tips on or strategy on how to build wealth. So it's going to be on you, because next year, guess what? I might not have that time. In a few months, I might not have that time because my plate might just be full, right? This, like I said, this is corporate social responsibility for me, giving back to the society. Once that period is over, or once I've already exhausted my limit, that's it. We move on. So even talk to me, maybe you might have to pay $5,000 or maybe $10,000. Major, public administration, and minor in HR. It's a beautiful one as of last year. As of now, add AI in whatever you are doing. Think of what you can do to add AI to it. because what was this company that I was seeing the other day? They said they fired entire HR unit because they don't need them. So, the advice I will give you is think about what are your other interests, right? And then how do you add AI to this HR? I'm telling you exactly what I tell my son trying to do business major. And I tell you, in everything that you do, add AI. Or then another thing that you want to do, go into the, what is HR, whatever, for the, or what can I do with these right now? And congratulations to the person that made that purchase. What can I do with this, my career? Put it there, ChatGPT. But then it is immune from layoffs and all of that. What can I add to it? And will give you the best of the income and all of that in the next 10 years, and my job being immune while in college, right? Those are the things. Just add it to it and then let it see what it gives to you. All right? Let it see what it gives to you and then incorporate it into it. Take some certifications, right? That you can also do so that you are almost immune and then you are indispensable. So that's the thing. Like, that's what I tell my students. Like, whatever you do, think about it. Always think about return on investment. Okay, this thing that I'm doing, what is my return on investment? Right? So, like I said, $500, one certification, 30,000 more. That's it. Right? So, you want to work in oil and gas, what certification would put you in that? So, position yourself. You are HR, right? Think of yourself as an employer. Think of yourself as an HR. Then you now see that gap, fill that gap, and then see yourself come out on the other side. All right? I hope that helps. All right. So if you, and for those that, if you want to know how to buy real estate, now that you know your down payment, money is no longer the issue. The other thing, and we'll talk about the other thing, is how do you now buy your real estate? So you already have down payment. How do you buy your real estate in 90 days? Yes, you might not have down payment right now. Do we have the exact cost that would help you? It's how to buy real estate in 90 days. Right now, you might want to buy it and have it because right now it's at $79.99. Limited in nature, in price, or limited time. It will purchase it one time, but you have unlimited access to it. But guess what? The regular price is $497, $497. So if you buy it already, whenever you have your down payment, this is $79.99, you know that, okay, you have already taken advantage of that. You're just getting your down payment, and it's going to help you on how to even get your down payment, all of the different strategies. Somebody asked earlier, how can I do real estate without any down payment, right? I said you can actually do it without a down payment. It just requires legwork. If you want to understand everything about that, not even bringing a penny out of your pocket, using other people's money, you would find it right there. Then how to manage a property, how to know this is a good property, this is a bad one, all of those things, you find it in the course. And for the smart investing, right? Like I said, that one is $27. It might be your first $27 that you invest right now. Know that because you want to put it in ETF and start getting your money returns on your investment. So everything right now is at CSR price, so that nobody would say, oh, you know what, it's because of money that I'm not able to invest. Reason why we do this, we can as well just do it and give it for zero. But we've noticed that if we give people something for $0, people do not value it. People don't, it's just like you go to the store. They put something outside, they put $0. What comes to your mind? What? Maybe you go to an African store, and I see it every time. You go to an African store, you see them pack cans of food and, maybe, some swallows and all of that, all those things, they put it outside. What comes to your mind? What comes to your mind? Expired in days. Thank you. So it means that, would you even go there? No, I don't want it. It's like the worst of. So that's the thing. It means that there's no value. As a matter of fact, my team have been telling me that, yeah, no, exactly. My team have been telling me that the fact that we have this price, but I said, this is CSR price. So if you start seeing, you want to take advantage of it now, and the time is very limited. Once the CSR period is over, is, as a matter of fact, is another few days, and they can turn it off. They can, because it depends on when the initial price timeline, they turn it on. So it can turn off and switch it back to the regular price at any time. So you want to take advantage of it and know that, okay, $27 for ETF, you're going to do that. I have the training to help me execute step by step. Everything, execution. What should I buy? How should I buy it? How do I open an account? Everything end to end. Then for real estate, okay, I know I'm saving this amount of money, but then I need to also get the education before the date. Let me get all the education and everything, how to buy it, what is rental income, what is ARV, all of those kind of things, and to property management. If I had to deal with eviction, what should I do? All of that from beginning is a full 360 cycle. That's what you have in the course. You can buy both of them. The two of them right now, I think, is less than $100. When you bring the two of them together, it's less than $100 or about $100. That is not the price of one. Regular price for smart investing is $297, and the other one, buy real estate in 90 days, is $497. So take advantage of that. And I'll wrap up here. Hope you have been able to find value today. Put one. Don't forget to also click on the the class is almost full for the Wealth Building Academy as well. Don't miss out on the opportunity for you of a lifetime. Come and learn that. And make sure I'd appreciate if you found one. Great. And make sure you, if you have not been following me or you have not subscribed to my YouTube channel, make sure you do that. It'll be great. You're already here. It'll be great. And since you're already going to the YouTube channel, just go to the Instagram. My Instagram page, there's so many of the videos that are just blowing up 1.7 million, 400,000. When is the last day to buy real estate? Day's course. Today, the daughter of Yahweh. Or when do you want to buy it? When do you want to buy it? Put the date. Put the date. Don't wait till the last day, because a lot of time that's what happens. That's what happens to the, what was the last training that we had? Next week date. Put date. Put date on it so that you remember and set it up on your calendar. If the price has changed before that date, daughter of Yahweh, put the date. What was I going to say? That was part of the issue that some people, when we had the last training, June 1st, okay? 1st of June. If the price has changed, send me a DM. We would give you the price, okay? If the price has changed by June 1st, daughter of Yahweh, send me a DM, all right? You can already send me a DM now so that we keep track of that. Oshape Life, welcome to the $1 Million League. Congratulations, you joining the $1 Million League. And it's so amazing. So amazing. Yeah, let's wrap up the life. I'm already tired. I think I talked too much today. Yeah, people will do it at 1:30 and I'll have more energy. Right? Today we started at 2 and I'm already tired. Right? But it's so amazing, and really thank everyone for Bayobi, thank you for tapping out the line. Everyone tapping out the live and clicking on the follow button. Make sure you get your Wealth Building Academy, your class. Make sure the class is not full because we start doing the content next week. You're welcome, Opal. You're welcome. I'm holding you accountable, Opal. I'm holding daughter of Yahweh. I'm still waiting. You're the one keeping us. You said June 1st. Send me a DM. send a DM. Send a DM so that I would, send a DM as well. Daughter of Yahweh. Okay, the people we are holding accountable. And maybe we'll start have accountability partners. Daughter of Yahweh, I'm Belle. I'm going to be on your case very soon. Edward, right? Opal, and Dr. Adefu, right? Those three people. Yeah. Okay, you sent a DM. Awesome. June the 1st. Okay. All right. Well, congratulations to everyone that joined the $1 Million League today. And everyone that made the purchases. Congratulations to you because you just got yourself a deal. You got like 10% of the price. Even less than 27 is not even up to 10% of the price. That's launch money. 10% of the price. Okay, Dr. All right. DM me your own data as well. Right? Yeah. So congratulations to all of the people that made their purchases, secured a spot for the Wealth Building Academy. Join the $1 Million League, clicking that follow button, and of course for everyone that made the purchase for Smart Investing Workshop, the real estate, sent you a DM. Okay, all right. Congratulations to each and every one of you. You guys have just been absolutely amazing. So proud to be your coach, right? Awesome. We'll be back tomorrow. We'll talk about, and please remind me tomorrow, we'll talk about the remaining paychecks, real estate paychecks that we talked about 3 today. We have another 3 that we'll talk about tomorrow. We talked a little bit on ETF. Maybe we'll talk about 529 IUL, right? And do some form of comparison, right? Right there. Yeah. Let's do that tomorrow. All right. Tomorrow we'll have and I am Belle. You just remember your daily at me. If you have not done your daily at me, any of those people that you have not done your daily at me is 1 cent. Let's do our daily at me and make sure you claim your points. Can we do our daily at me? It costs you 1 cent. 1 cent. Can we get our daily at me done? That would be great. It's just we just have 2. That's interesting. Yeah. Daily at me 1 cent. It just tells that's the only language that the algorithm understands. So that's why the only time I just ask for it. Okay. Just so that also shows that you're a fan. You see the MDL, that's his $1 Million League. All right. And my YouTube community, subscribe. Make sure you click on the subscribe button as well. All right, guys. Ensure that your money is working harder than you do. I love you guys so much. All right. Have a good one, and I'll talk to you soon. Bye. And my YouTube community, you guys are amazing. Make sure you click on the subscribe button if you have not done that. And I'll see you guys later. Love you. Bye.